Hello everyone, hope you're having a good trading week. It's been good for some people anyway. Some people have been calling, celebrating that they are making so much money in the those short trades. They're scalping. Yeah, the long-term trades, they're a bit tricky for so many people. They're scared about the war in Ukraine. Yeah, they're looking at all that action taking place, affecting the charts in ways that they don't understand, and they have resorted to scalping, which is not a bad tactic. It's actually very good, but things look very normal now. When the news is still, there's so much being talked about on the news, but the market impact, I think somehow all these countries have found a way of stabilizing their economies. Even with the war going on, they have to keep certain places, protected from the impact of the war. And as a result, many of these charts are a bit stable. There aren't so many gaps in there, too many spikes and whatever. Things look a little bit normal. So just a few minutes ago, at around exactly 10 a.m., there are so many events affecting the GBP, about 12 events. There are about about 6 events that are medium impact, 1 event that is very high impact, that is consumer price index. The major ones are consumer price index and producer price index, then the retail price index. So those are the main factors. It's basically the price index. There's also the core consumer price index, and the PPI, that's the producer prices index core output. So there have been quite a number of events, and the impact on the charts, if we can just move to the charts for a little bit, the GBP USD has really gone down. There is some good selling action there, and it's very visible in the 5 minutes chart. In these other charts here, it's a bit, it's not so much. Not so much, but so prices are a bit bearish for now. If you look at the funds that we drew yesterday for the scalping strategy, so yesterday we drew these funds here. I've added in another line. So the fund was stretching at that very bottom. Let me get that bottom again so that we I've made one modification to this. I've made just one modification to this strategy of the funds. So from that bottom to the top, around there, I think we're looking for one high point. Okay, so in this 30-minute chart, let's move it to the 5 minutes chart. We will get that bottom. What we're looking for yesterday, okay, there it is. So we have this bottom moving to that top there, and okay, there it is. So I'm going to insert the funds again. This time I have added in a new Fibonacci sequence, a new area, which is the 78.6. So all along we've been having the 38.2, the 50.0, the 61.8, and now I have added the 78.6. Now after zooming that out, okay, in this 15-minute chart, we have that. So you can see how prices really respect those levels, and okay, there was some other kind of analysis in this chart, and in this bigger time frame, if we're having a reversal there in this 1 hour time frame, I'm just making an assumption. We have these high points, sort of moving downwards, and this one's moving upwards. So that could very easily be a reversal. Maybe in the short term, you could have a reversal there. So we're looking at prices heading for this 23.6 in the 1 hour time frame. So there is some good significance there, a lot of support, at this 23.6, and we have that midpoint between the 0 mark and the 23.6, somewhere in the middle of the two areas, which is a point of good resistance there as well in the history. And yeah, so that is quite important to note that this event that has just taken place, all those events that we've just seen on the economic calendar, they have broken that level, and we could most likely be moving to the 23.6, and there are about 16 pips left down there, and so we have price breaking. Okay, you can see the movement of price within these Fibonacci funds, breaking through that 50.0 to the 61.8, and breaking through to this 78.6. Yeah, so yeah, so the market impact for these events, it could go on as the day moves on. The market impact is not just immediately, especially for such events which have a long-term effect on the price of the GBP. They may not stay, may not just be a one-time impact thing. We could have some good price movement as the day goes on. And there's some events that are left. This budget report affecting the pound sterling doesn't really have a time allocation there, so you can keep watch. You can keep watch on that one, on news coming from Britain, on those international channels where they where their news is normally allocated. You can keep an eye out for that. It's a medium impact event, but then it will have some good, just in case the changes are so much here, the impact will definitely reflect on these events that have just taken place. You will have some impact, just to just give it a boost of sorts. Yeah, so later on at 3 p.m., there's going to be a speech. Yeah, and always correct your time. It's always GMT +3. Yeah, correct your time so that you don't wait for an event at the wrong time. Yeah, I've done that before, and yeah, it's nothing. It's not fun. It's fun when someone else is waiting for the news at the wrong time, but when it's you, there is no fun there. Okay, so at 3 p.m. there is a speech from the Federal Reserve. This one is affecting the US dollar. It's a speech by a member of the Board of Governors of the Federal Reserve System. Yeah, and his name is Jerome H. Powell. Now, this one is a very powerful speech. The impact is always, it's always a full bar like that every time he speaks. So 3 p.m. is going to be very important to follow up on that speech, and yeah. Then that speech will be followed up at around 5 p.m. There is a new homes sales. Yeah, that's a month over month. The statistics. This one is a month over month, and it looks a bit positive for the US dollar. There's a small increment from 0.801 million to 0.81, so that is a 0.01 increment. So that is quite positive for the US dollar. Yeah, so here there's some, at 5 p.m., some good news for the US dollar. Then the new home sales change, there is no consensus there. Just the previous figure, the 4.5%. And these ones are very low impact events. Then affecting the euro at 6 p.m., there is a consumer confidence medium impact event. Now this one here looks negative for the euro. Previous figure is negative 8.8, and the consensus, the expected figure is negative 12.9. So that is another, that event has some negative impact on the euro. That will be at 6 p.m. Then at 6:45, there is the Fed's daily speech. Yeah, so this one is not a very common event. The Fed's daily speech. I haven't seen this one in a while, but yeah, maybe every day there will be a speech from the Federal Reserve, and that will be giving us some good market impact on every chart that has the US dollar within. And also charts like gold, those ones will also get some impact from such an event. Yeah, so it's still loading, but those are the events that we have today. Yeah, and you have to really keep an eye out at all these particular hours when they are released. So just to, okay, we've already seen these events affecting the GBP. We've seen the market impact. Yeah, prices are still, shooting down a little bit. And yeah, so let's see if we can get some read on this event. This must be very new for so many people. So looking at it in some detail it will be very important. Okay, so this is a very important chart, the Euro GBP. Yeah. So despite the euro has had some upward movement. That is actually a spike in a very small time frame. That very small movement measures about 18 pips. Looks like a small movement, but this is a 4-hour chart. The news impact there has put price up there just a little bit. Now, counting these candlesticks to yesterday, we have 1, 2, 3, 4, 5, 6. Yeah, so these are the candlesticks that actually measure 1 day, 24 hours. So yesterday, I didn't really look at this chart on the program, but after the program ended, I started looking at this chart, the Euro GBP, and the price was somewhere above this 50.0, somewhere above the 50.0, and yeah, but I think I had drawn this line to mark a point of support and project at least to the 61.8, and yeah, this one has somehow played out, but it is still somehow bearish. If we look at the MACD, I don't think I've opened this one for quite some time. The MACD recently crossed below 0, and it is safely down there. So if these white lines are to move above the red lines, if we have some kind of retracement there, we already have an oversold position on this RSI. Yeah, the chart is Euro GBP. So there's an oversold position there on the RSI. It is coming from below 30. And yeah, we're definitely going to have a retracement there, basing on the rules. If we don't get the retracement, if prices just keep on shooting down, then by all means we can go down with the prices. But if we follow the rules, then we shall wait for this to move out safely out of the oversold position, and the MACD will also somehow slightly, probably even move above this red line, this signal line. So the main line is this, the white bars, and the signal is that red line. So if we have these white bars moving above this signal there, we shall be having a good setup for a good sell. So we can, might sell after that, probably to the midpoint, the midpoint in between that 61.8 and the 100.0, yeah, somewhere there. And yeah, so these retracements, it's easy to call them. Okay, they're about 50 pips in there. So these retracements, it's easy to call them and say that, price is now, the RSI is oversold, we have the MACD moving like this, so we could have a retracement up to maybe the 50.0. We can easily call that one, and it could most likely even hit the 50.0 before we start selling. So if we get some good resistance up there, that's about 17 pips. If everything works out as predicted, then we shall have a good sell. Yeah, so the question is, why don't we buy now and get those 17 pips to the point of retracement, and then sell or something like that. But anyway, that is that's how normally it works. But you might fear to take that action. Now, on another note, following up on yesterday's what we're doing with the funds in such a downward trend for this Euro GBP chart. I'm going to insert these Fibonacci funds, and this is the highest point, and this is the first triangular, the first V shape that we have. So that is the first low. Yeah, so from the top there to this low, I put the funds. Okay, so starting from this candlestick that was bearish of sorts, the first bearish candlestick that gave us a downward movement. Let me zoom this in so that I really get it on point. So that is the first point of the bearish candlestick, and yeah, that is the low point, the body of these candlesticks. Okay, so we have the funds there looking like that. So let me just extend this a little bit. Okay, so we have the funds in that direction, and looking at the price movement, there's a good, they provided some good resistance. You have that doji inside there between the 38.2 and 50.0, and they've really extended. You can now see the importance of having this 78.6 level up there, so that one will give us some other guidance. So generally prices have been it has been moving just in between this, especially the 38.2 and the 50.0 and the 61.8. Yeah, so prices have been squeezed inside there. There is that point of support there, and prices moved on along that way, and then they broke that level. So looking at this, we're being guided by these Fibonacci retracement levels, and here it's a 61.8, and the resistance we have up there is a 50.0 retracement level, and this 61.8 Fibonacci fan. Yeah, so if we break this one, if we're going to have some kind of sideways movement, okay, at least these ones give us some kind of time, some time that you can expect. So if we have this candlestick here right now, the next 4-hour candlestick will be about there, another one there. So we have about a one. Let's just count the periods. Yeah, so 2, 3, 4. Yeah, so there are about 4 candlesticks in a range market to hit that. To hit that resistance. Yeah, so we have about 4 candlesticks to wait for. Yeah, so you can count 4 candlesticks times 4 hours. That's about 12 hours. If we don't hit it earlier on, so we have about 12 hours to wait for some price action there. Yeah, so that we hit some point of resistance, and if we're breaking it, within those 12 hours, we could easily break that point and look forward to trading to this 78.6. The maximum candlesticks it could take to the 78.6 are about 26 candlesticks in a ranging market. If the candlesticks move very high above, there will be a bit less because of the volatility. But so for now, 12 hours is a very short period of time to wait for some good action there, and we can take advantage of that. Okay, so that's for the Euro GBP. GBP USD, it is strongly moving downwards. This candlestick there, it's a bit, it's very bearish. Looking at that 23.6, about 11 pips left. So we can, we're just going to keep on watching that one there, and we see how it progresses. The USD JPY, following up on yesterday's events, prices have just. So yesterday we're about at around this point here. We're on this high point, and we had all these candlesticks there. Price moving along those Fibonacci fans, and this one that we added in the middle provided a nice resistance there. And the price is still moving high for this USD JPY. But we're still moving in between these funds, and they are providing enough information for us to be, a little bit careful with the price movements. Yeah, so this one is this was a Euro USD. When they delete these funds, they're no longer useful there. So, whoever looks like a successful trend upwards, if we just draw their trend line, the price came from the bottom. That was a point of support. Yeah, if we take it high like that, okay, we have those good support levels. And now price is in some kind of a range market. Yeah, so I'm going to draw the funds, how they were originally drawn, so that you see the difference. Yeah, so here I'm going to insert the Fibonacci funds following this trend line, which was the way I was doing it originally. Yeah, so following this trend line, I think this was the first low and the second low. Yeah, something like that. Okay, let's try and follow those low points, and you always have to get a significant area. So looking at this range market of this Euro USD, prices have actually been following these patterns of these funds. The 38.2 provided good support at that level as well. Then those funds were broken. That 38.2 level was broken, and good support was at that 50.0 and resistance at the 38.2. Another break took place there to the 61.8, which was somehow broken and tested, not in a very good picture perfect format. This one is a 5-minute chart. We're still looking at those scalping, not really scalping strategies, but something to help you scalp, because too many people are scalping. So in the midpoint between the 61.8 and the 78.2, if we just measure somewhere in the middle, if we have that equal representation, I have the formula for the Fibonacci sequence. I'm going to calculate all these levels, and I calculate to the 78.6, then realize that they really open up, they become really wide as the numbers become 0, and these are percentages, so I'm calculating them even beyond this 100%, which is okay anyway. So in this 5-minute chart, now I'm using these funds here for for people who find trouble analyzing range markets. You don't really know where the support is, where the resistance is. It can sometimes be very tricky, but these funds can provide you some good, some good areas in the market that you can really use as a reference to either enter the market or exit, or put a stop loss or a take profit. Yeah, so that things are not very complicated, so that you don't even lose your money in some funny ways. So yeah, so we have prices moving there, and we're now at this area in between the 61.8 and the 78.6, some kind of equal distance between the two. We're having some resistance, so we're having some support there. Yeah? And maybe if I get this RSI, if we're having some kind of a retracement, and here we have so many, there are too many overbought positions, and this being a 5-minute chart, they might not really hold, but one thing you can rest assured is if price breaks, if you have a clean break below that blue line, despite having all this low price movement, we don't really have an oversold position on the RSI, and maybe with the MACD, okay, it's already below, so we are very, very bearish there. So maybe if we have a price break, there's already a break of this this upper resistance hasn't yet been broken. Sorry, the support. There's another support to that level there. So we have this lowest point in this kind of a range market, and another low point. So If we have a clear break of that one, then you can get some pips below there. You can collect some about 7 pips, yeah, 7 scalping pips, which are not so bad. Then okay, to that point, then to this 78.6 fan, you can get about 15 pips. Still not bad at all. There is it's a good way to scalp anyway. Yeah, so that's for the Euro USD 5-minute chart. I'm going to leave this one open so that we follow it up and see how far this one here will have moved. Yeah, the good thing about a 5-minute chart, we shall have some very immediate results, not far from now. Okay, now this USD JPY, this one here is in a weekly chart. We opened this and we are following it up, and we had the 61.8. Okay, for these funds, we had the 61.8 down here, and I was adding in some other funds to give us some, price movement and how to allocate areas of resistance, especially for this weekly time frame. And yeah, so prices this week, they've really touched up there. Yeah, so the last week's candlestick was this one, and this week's candlestick has moved a total of about 200 pips. Yeah, just based on this, and it has touched that point of resistance following these funds. So the funds only had these 3 levels at that time, and right now we have prices up there. Let me see if this. Let me just add in another set of funds so that we have. We can get a look at that 78.6. Okay. Yeah. So there we are. So we have the 38.2 right there, the 50.0, the 61.8, and the 78.6 right there where we have that clean break. Yeah, so the measurements we did, okay, this blue line will remain there, but this one is a real figure in the Fibonacci sequence. So the 78.6 is where we have that clean break. And yeah, so I'm going to add more levels until we reach the 100 level. So somewhere up there, that's where this resistance is, and that's where the price has reached, about 200 pips. Ever since this week began, just in the 3rd day, and that's a good number of pips for, if you're a long-term trader. Yeah, 200 pips is quite good. Let's just calculate that and see how nice that is. So 200 pips to the top. So 200 pips with a 0 there for the empty 4 points times let's say 0.01 lot size. The lowest you have like $20 for a 0.01 lot size. So if 0.01 is 20, that means 0.1 is 200, 1.0 is 2,000, and if you use a lot size like 10, it's about $20,000. If you use a lot size 10, so yeah, 20K can be some good money. Even 2K. Yeah, 2K is some good money if you get that from Monday to today. Yeah, so long-term trading is not so bad. You can make some, good money from there. Okay, now this chart, the other first chart we looked at, the GBP USD, we're looking at selling. Here we have our sights on a reversal. Now we have the alternative analysis. So this one is the bearish analysis. In case prices are going downwards, we follow these levels. In case prices are moving upwards, we already have this drawing of prices going up, and this one here we drew it some time back. So first and foremost, we have divergence. This one here is the long-term strategy, and it's bullish. So we have divergence that took place some time back. That was on the 8th of March. Started following it up to the 14th. And we have divergence there. Then the top point of divergence is there as well. And prices went and hit that top and became a little bit into some kind of a range market in that area there. And this being a 4-hour chart, it was really ranging. And then there's a clean break through the 38.2 to the top there. Now, the news that has happened today has caused this small downward movement, and the pips left to the 38.2 in case it's really rejected. So it really supported them down there. There are about 22 pips. So those are 22 pips left for the possibility of hitting a support level for a retracement. So we're going to carry this 22 pips, 22.8 pips. We're going to carry them to our bullish, our bearish strategy, and then we're going to calculate 22.8 is somewhere there. Slightly below that 23.6. So, so that area becomes an area of caution. If we're having our selling, if we're selling, 23.6 is a safe zone to get out, because below that is that major line that marks the 38.2 in this 4-hour bullish movement that we're looking at. And we don't really have an overbought position there. It is safely below the 70 mark, not really above. So the retracement could easily get there or close to the 38.2. Then we could have prices moving above. And if that is to happen, then if the prices start becoming bullish, then we buy at that point. If after breaking that level up there, it will have moved safely above the 0 mark, and you can start buying up there. It will be very safe to buy from that top and continue with an upward movement, and the guidelines will still be here, buying from above there. It will be somewhere there. Then there will be about 16 pips to the 50.0 and about 52 pips. Or 50 pips to in between the 50 and the 61.8, then about 90 pips to the 61.8. So the alternative kinds of analysis will definitely give us a lead on whether to buy or to sell, but then we're very close to how far this can really go in terms of selling. That 38.2 could be so far. So if we get a retracement there, then that will definitely work for this bearish analysis. We shall hit some nice point. Even here, the RSI could hit the 50 mark and probably go below and pick some good strength to start buying. So, those ones will be fun watching that and waiting for those results. Okay, now this chart, XAU USD, better known as gold, there's some kind of triangular formation taking place there. We have these high points moving down, and these low points. There is this lowest point after this high, after this overbought position. The price came low for this support. So there's what looks like a break there, some sort of a break, but we are more or less into this kind of triangular formation for this for this chart, gold. So that this kind of movement, we're going to have a breakout very soon. A breakout will come in very soon. It might be downwards, it might be upwards, but we already had some strength of these prices moving downwards, and now prices are very, very much in some kind of a range market. We don't really have a lot happening there. The first kind of analysis we did some time back was this this upward movement coming from this point of divergence, and it looks like it may not be relevant anymore. It may not be relevant anymore, but then we have a marked zone. Let me remove these Fibonacci levels. So we have this marked zone of this lowest point that gave us this divergence. So if price breaks below there, we are quite, we can handle it from there. So if price breaks below this level, we could sell, but if it breaks above this, this diagonal line, then we shall have enough energy to buy. Yeah, so the area of resistance is, very, very stiff. It's not a very big gap. So that whole line is an area of resistance. The area of support, we have this low point and another low point there. So, this whole area there has to have another color so that you know that your resistance is in between those two lines. And so that is an entire, if you could shade it, you could have this whole part as a point of support. Between that one and that one. But resistance, we have a clear line that we can easily look at in case we are breaking it. So alternative ways of getting some points that are somehow significant. One is that one that could have supported our bullish buying, and we saw these funds being broken, even the 78.6. It's one that provided resistance up there. So the 78, after breaking all these funds, you have that level there that is tested, and so that one there gives you a very nice feel that, this might really break down below, and we get some downward movement. So hopes of buying, one, the divergence was there. We had very nice divergence, but prices didn't really continue upwards. They don't really have an upward trend. So after analyzing this point, let me draw it again. That was the point of divergence earlier on in the chart. So we analyzed that, got this trend. That was very good. After that one, after this divergence lost its relevance, after it lost it, now we analyze the second movement, which is that one. That one there, and it gives us the funds. So that one there, it gives, if you zoom in a little bit, you can see how significant it was. So gold prices moved up to that first top. So here you start getting some good areas to guide you on the price movement. So you can see prices being resisted at 38.2, then a clear break to this 61.8. And you have some good guidelines there, and prices again resisted there at the 61.8 and pushed to this area of support at the 78.6, the area which was broken, and then prices moved on to being resisted at that 78.6, and then it continues. Now here we have maxed out the usefulness of these funds. So those ones, delete them. Then we're going to put new funds. So we finished this level there. We have finished this one. Then we have finished that one. So now we have this one there. To allocate some new funds. So we take it from the top to the bottom there. And now we have our new guidelines. So we're taking this from the top to this bottom there, and then, the new guidelines. So the first movement from there was price being resisted at the 38.2 and being kept inside there between 38.2 and the 50.0. And we have some clean breaks to our new 78.6 fund, which has given us some very good resistance there. And you can see the support at the 61.8 and keeps on moving like that in that sequence. So we are there right now. We're just facing some support at this 61.8. There was good support there. You can see prices moving along that line, and there's some clear support there. If you put in a line just in between the 61.8, you know, the blue line, if we give them some equal distance between the top and the bottom, then we have our point of medium. This one here is resistance and some support there, resistance down there, support there, resistance there, and just coming off this point of resistance to that support. So so with that in mind, these lines here of the resistance, they're still very, very important. So we're going to have that resistance there that has been marking our low points. And we have another area of resistance that is marking this other low point where the divergence was. Yeah, so those are very significant levels. So the thing to wait for here, if we break below this, now this one here is marking out our areas of resistance. If so we're moving within these channels. If the price breaks above this 78.6, this is gold, 1 hour. If price breaks above that 78.6, then we shall have maybe a continuing sideways movement upwards. But we're clearly in a very good bearish move. So if we have price breaking at least below this 61.8 Fibonacci fan, we could, we could most likely, maybe in the next, this is 1 hour, maybe in the next, let's see, 2 hours will be around there. So if the break comes from maybe 2 hours from now, then you can collect some 89 pips of gold to that other low resistance. And if we have a good break, we haven't yet had a good break of this resistance. There was a good attempt, there was a good attempt here, but then it failed. And if we get a very nice break below this this area there, then we can sell to this next point. But if we get a break, if we get price breaking this support line, that will be excellent. Because gold has been in this range market for quite some time. And getting back into a volatile market will really be useful, especially for the scalpers and people who love gold. Some people trade only gold and it's quite important for them. So if we have prices breaking those levels, we have some good guidelines there to show us where price could delay to break. Because here you could have had a clean break, maybe at this point. Some good volatility, prices coming from up there, very nice price movement. Then, you have that support and prices move back above. But a clean break below this area of support will be good for us. And we can trade downwards. And if we break this 38.2 Fibonacci fan, that will be very, very nice. If we can break through all these yellow lines, we shall have a very clear path. Selling this XAU USD. So I think that's the last chart for today. So funds can be used for so many ways of analysis. They'll give you some good areas where to apply your support and resistance, where to put your stop loss and your take profit. If you're a scalper, you can have so many mini lines in the middle there, and on a smaller time frame, you will have some good areas of support and resistance, especially like in a 5-minute chart or even in a 1-minute chart. So you can have the analysis done on a 1-hour chart where there are so many gaps in between. Then when you get into the details on the smaller charts, you will have some good areas to mark, and you take very small chunks of pips, small chunks of pips, or to the very big lot size. It will amount to some good money there. So these things sometimes for some people call me and they tell me they look very difficult. But that's the thing. If you start trading Forex and you expect to just click buy and sell without going through all this hassle, then you might not really, you might not get what's happening. You might think it is chance. You're making money from some kind of, you're lucky. You're lucky. You went to church and you prayed for a breakthrough. And that breakthrough came in form of Forex. And you made some good money. And the breakthrough came once. The second time you went for that breakthrough, Yeah, it totally broke you down. Yeah, and you go back to church and you. Anyway, so many of these things I'm putting them into robots. The fully automated robots are really, there's too much work there. But these are robots of funds and retracement levels and pivot points. Yeah, they really help out. They really help out in marking your zones and probably even entering trades at particular points. Like the Fibonacci robot that I have, you just have to enter the high point and the low point. Then it will mark for you the retracement levels. So I'm building another robot for this, for the funds. So that robot there, you just also feed in the date, or the candlesticks. You have to feed in the low point where you're starting the funds, and the high point. Even if they're bullish, then you'll have to mark that there are about a number of candlesticks in between these points. So point A is this low, point B is this high, and in between you have a certain number of candlesticks because they're not always the same. So after doing that, it will calculate for you all these areas that you need, and then it can respect the support and resistance. You might say that once you move above this level, buy, because it has moved above a certain level in the funds. So that is still work in progress, and it's very fun work to do. All these formulas here, they can sometimes drive you nuts. But at the end of the day, it's really fun to look at and see how it trades throughout the whole year, and how it is applied. That's a lot of fun. So these are some ways of analyzing your charts. That's a trading strategy. I hope it's not very complex. I'll be showing you more. So this one here, I think for the funds, I shall keep on applying them every now and then. I'm going to have the daily pivot points put there. If you don't know how to calculate them, you can Google and see how you can calculate the pivot points. Then, you see how to calculate them manually on every chart, and you have to calculate them daily. So these pivot points, they might stay in a certain chart for maybe a week, maybe a month, and still be significant. But the pivot points, they expire every day. So if you did calculations for yesterday, you have to do more calculations today, and like that and like that. So we shall have everything calculated here in an automatic way, and we shall see the pivot points of every time frame. For every chart, because it's going to be calculated on the previous day's data, the high, the low, the open, and the close. So they'll be calculated there, and we shall know the day's support and resistance levels, and we can calculate how many pips are in between, so that we know how strong these pivot points actually are for that particular day. So I think that's it for today. Thank you for watching. Have a good day. Goodbye.